David, thanks very much for joining us. It would be good just to get a sense from you of what you've seen in terms of activity across the sort of transport and logistics markets. And what does this mean for investment going forward?
Since the pandemic hit, we definitely saw an initial dip in activity, and as the demand aspects and the impacts of that came through quite strongly for a number of the transport infrastructure sectors. But as that recovered and the shape of the recovery became clearer, we've definitely seen some really strong activity really across all of the different subsectors of the transport infrastructure, with a lot of deals across the rail, toll road, shipping, and even aviation, where there's been some fewer, but some really significant transactions taking place. So overall, we see that there's a strong demand. There remains a strong demand for transport infrastructure.
And in terms of the types of investment being made, what are you seeing there, David? Is that more focused on rail, more focused on road rather than air transport? What have you been seeing in the market?
No, absolutely. I think the mix of transactions is certainly less on the aviation side. There's been some really substantial deals across toll road space and also in rail across Europe, but more generally across the world, as I think there's some good confidence in the ongoing demand and necessity for both of those sources of transport infrastructure. Aviation certainly has been hit the hardest of those sectors, particularly in terms of passenger transport. And so a slower pace of recovery, but notwithstanding that, there's really been some large public to private transactions that just shows that the investors are still confident for the right asset. There's a strong outlook in the future for the aviation space.
David, there's been a big focus on ESG across the real asset markets, real estate and infrastructure. What's your sense of that? Is that kind of key driving forward?
ESG is absolutely going to be increasingly important for real asset investors going forward. We really see that ESG is the backbone that supports the Build Back Better strategies being adopted by governments around the world. We've also seen a rapid acceleration in the level of focus given to environmental considerations from investors in the real asset space. This is both with respect to their existing portfolios and more time being spent with management teams to ensure that the assets themselves have a clear decarbonisation plan. But also we're seeing investors less willing to either acquire or provide more capital into businesses that haven't considered in detail both how the pathway to net zero might impact the business going forward, as well as what level of investment will be required for the businesses to decarbonise themselves within their long-term business plan.
Great. Really interesting to catch up. Thanks for joining us, David.
A pleasure. Thanks, Richard.